welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we help you understand the trading setup and the market strategies for the day and for the rest of the week. It's the midweek, and the situation across the globe has actually not changed much from what it was last week. It has only deteriorated, if not more. Remember, the Israel-Iran spikes have intensified overnight. The US has been deploying more military assets to the region too. President Donald Trump in the US has met with his national security team. We do not know the exact plans at this point in time, but seems that Donald Trump has demanded on Truth Social for Iran's unconditional surrender. Now, Trump has also warned of a possible strike against Iran's supreme leader, but has also marked that they're not going to take him out, at least for now. So those are intensifying comments that we have been getting. As a result of this, what we've seen is that the Brent crude oil prices spiked 5% yet again, nearing $77 a barrel. So that's something that we will get to know. US markets, they were down, 0.8% decline on S&P 500. NASDAQ dropped by 0.9%. Dow Jones also slipped by 0.7%, and the futures have also started off on a negative note. Asia Pacific markets this morning have been mixed, but largely on the negative side. Nikkei was just about 0.1% higher in trade. Topics was about 1/10% again higher in trade. We did see Kospi about muted trend there. ASX 200 bucking the trend though, 0.2% higher. Only the Nikkei and the Kospi now in the green, but China and Hang Seng have both slipped in trade. And the GIFT Nifty is again indicating a muted start at 24,840 odd levels. So that's something that is the setup. Later tonight, we will also see in the US FOMC decision. And of course, there will be Jerome Powell's press conference after the recent escalation in the geopolitical tensions and the spike in the crude oil prices. It will be important to also track Powell's commentary on potential rate cuts in the future, the threat from oil prices on the US economy. That will also keenly be watched out for. Foreign portfolio investors, they've turned net buyers as of Tuesday, bought stocks worth about 1,660 odd crores. Domestic institutional investors, they continue to stay net buyers for the 23rd straight session, obtaining equities worth about 7,796 odd crore rupees. That's the setup, and of course, there'll be so many stocks that we will be discussing in the interim. Let's welcome our guest on board. We are now joined by Mr. Gaurang Shah, Senior Vice President at Geojit Investments, now on the program with us. Warm welcome to you, Gaurang. Good morning to you, and thank you so much for taking the time out. Seems like the geopolitical tensions are some things that we have to keep going back to when we have to discuss about the market sentiments. Tell me, how are you assessing the situation as it is getting more severe? It's deja vu. It started off with Ukraine, Russia about 3 years ago, and things seem like, initial 1 week was all about negotiations and things, probably sorting out de-escalation. But it's 3 years on and the war is still on. What about Israel and Iran? How do you see the situation?
Thank you, Sakshi, for having me on this show. Good morning to you and all the viewers of BTTV. So I think it's going to be a developing story because it's very difficult to predict in a situation like this as to where it can lead to and when it can end and in what form, Sakshi. All of us can do, Sakshi, is to react to it as and when the news flows break to us and we are able to access the impact of such situation. Yes, you are right. This was always a evolving situation in the Middle East as far as Israel is concerned. First, it was limited to Palestine and Hamas. Then it got extended to more boundaries across Israel. You had Houthi also getting involved, and now you have a larger escalation in form of Israel and Iran. Now, why it becomes a little bit more concerning, Sakshi, is primarily because of the natural commodities that go in and out of Iran. Iran is the second and fourth largest producer of crude oil and natural gas, and it also actively has some control on Strait of Hormuz, which has about 20% of global supply in terms of energy, natural gas. So along with Iran, there is, I believe, Oman, and there are 3 countries that control the Strait of Hormuz. So in case if there is something happening over there and it gets closed, then crude oil prices are likely to boil again, which is again a concern. But what I am given to understand, Sakshi, for good reason, is that since quite some time, India has stopped importing any kind of energy requirement from Iran. It's almost been 3 or 5 years, or maybe somewhere around that much. So this situation, and of course not to forget, there are a lot of statements flying across from different world leaders, which is a concerning. We had some statement yesterday from President Trump.
Yes.
Before that, there was exchange of fiery words between Israel and Iran. And on the other side, not to forget, a very fluid situation in terms of Russia and Ukraine. But I'll tell you one thing, Sakshi, despite of all these things, even last week when that story was developing and breaking, talking about Iran and Israel, Friday we started off on a low point, but we closed with quite a bit of recovery. Similarly, on Monday, Tuesday was better. Today, I think we should have a flat to positive start. So there is buying coming in at lower levels. That is what is visible. So my only request to all your viewers and investors, especially, I think you should grab this opportunity and start deploying slowly in strong fundamental stocks. Short term, medium term, very difficult for me to take a call, but I would only advise traders to use their wisdom and act accordingly. Uh, One more positive is that there is absolutely nothing wrong as far as the domestic data points are concerned. And every time these kind of situations has evolved in the past and has ended, I think our markets are the one of the first ones to recover from that kind of a situation. So I believe this time also is not going to be any different. It's only a matter of time because situation is deteriorating day by day. Earlier it was limited to nuclear facilities and natural resources facilities. Now it is spilled over to cities. That's a little bit difficult situation.
Absolutely. Now, Gaurav, when it comes to the oil prices and the reaction, you did say that, of course, if the situation escalates, there could be some boiling the oil that we can see. So far we've been seeing an oil as a comfort zone for us. Inflation has been cooling off. We've been celebrating levels of 2.8% odd. Now, with this situation changing, does that risk our own inflation trajectory as well? And put into question what could be our own future expectations on the rate cut front. Also, what are you expecting tonight from Jerome Powell with these fresh concerns emerging? Could there be a change in the way the monetary policy has been devised for the year?
So to answer your last question first, I think it's going to be a status quo and more so similar line in terms of commentary what Mr. Powell said last time around. I don't think anything has changed over there. In fact, things have deteriorated in United States, led with the kind of protest against the king, so-called king of United States of America, Mr. President Donald Trump. So I don't think it's going to be different. So it will be business as usual as far as US Fed statement is concerned. Your question with respect to our economy, inflation, well, as of now, it's not looking ugly. Let me be very honest. I think about $85-90 is the cap on the higher side. If the crude oil goes above that, then only then we'll have two reasons to worry. I don't think that will also have any kind of serious impact on the inflation front. Maybe momentarily we might have a bump up, but nothing concerning. It will be very marginal in case if it is any. And my sense, Sakshi, is that the prices of commodities of natural gas and crude oil has only gone up because of the geopolitical situation. It is not that the production has come down, nor is it that the consumption has gone up. So it's a speculative bump up in crude oil and natural gas prices. Any day, breaking news comes in form of pipes of peace being smoked by Iran and Israel. I think you will have sizable correction coming in both these commodities. The way they have bounced up, I think they are going to fall also as much.
Okay. We already have the pre-open ticks. We slipped below 24,600 for a moment and then we have recovered a bit. 24,742 right now. 0.4% of a decline is what we have on the Nifty. So it could be a weak start for the markets today, as is being indicated in the pre-open trade as of now. Of course, we'll keep an eye out on all the oil and gas related stocks as they could be reacting to the spike in the crude oil prices overnight. And of course, the paint companies where crude is used as derivative and raw material as well. So that's something that we will be looking at. The space, especially the gas companies, they were doing pretty well over the last few days, but there could be some knee-jerk reaction on that front. We'll keep an eye out on that. Any suggestion on the oil and gas related stocks? How are you looking at it? I remember you have maintained on our channel as well that you are positive on the OMCs, IOC, HPCL, BPCL. And what now? And of course, what about the gas related stocks? We've been seeing some news flows regarding the gas stocks over the last few sessions as well. Any suggestion on this space?
So Sakshi, look, in this kind of a situation, it's very difficult to take a decisive call. But
Yeah.
again, before I go any further and give any names and recommendations, I think it's prudent to give a disclosure.
Yes.
Whatever investment recommendations that I'll give is totally based on the recommendations given by our research team. Our company Geojit or myself do not have any investment interest or financial interest, nor there is any conflict of interest. But we regularly give recommendations on similar lines to our clients. They might have their investment interest. So now talking about oil and gas, very difficult, but yeah, I mean the research team has coverage on ONGC and GAIL amongst the exploration side. On the oil marketing companies, we have coverage on HPCL, BPCL, IOC. Gas, I think slowly, steadily, the consumption is going up. There is a dedicated effort by the government to improve the distribution infrastructure pipeline, which is also auguring quite well. And I heard Mr. Puri the other day, he was saying that rising crude oil prices are not going to be a significant impact on the Indian economy. And he also mentioned one line which was very interesting, that we are getting more and more dependent on our own natural resources, whether it is onshore, offshore, or ultra deep high seas. So that's a soothing kind of statement that he made, and I was quite pleased to hear that. So these are the companies, but the way crude oil prices and natural gas prices are, very difficult to take a short to medium term call. But yeah, long term, like I mentioned, our team has a coverage, positive coverage on all these names.
Okay, got that. I also wanted to understand from you risk of sentiment that usually gets generated when such geopolitical tensions are in focus. People shifting their money out from the riskier assets like equities, probably to gold, silver, fixed income products as well. But at the same time, currency is something that they go to. But there is a different approach or a reaction is what we are seeing from the dollar index right now. It's still just jumped to about 99. It's seeming that it's not reacting overtly to these kind of conditions and developments that are coming in. I want to ask you a two-pronged question. One, what should be the approach towards safer haven assets like gold, silver, which are perking up again? And secondly, what's really happening with dollar index and why such a different behavior this time?
So I think dollar has its own problem, and I don't think America also wants dollar to be much stronger than what it is already, right? Because it's going to be counterproductive for the US economy also. And somewhere I was reading in some report that US is looking at weakening the dollar to a certain extent, and I think rightly so, because it will not be very productive. It will be negative impact as far as dollar and rest of the world currencies is concerned. Uh, I'm sorry, I forgot, Sakshi. What was your first part of question?
So gold and silver, sir,
Yeah.
should one be really
So,
looking forward to allocating more money?
so Sakshi, one of the principles that you need to follow religiously is discipline, and the discipline in terms of investment is that don't put all your eggs in one basket. Diversify your portfolio so that you hedge your risk across different asset classes. Uh, I don't want to be very vocal, but I'm sure you will recollect the conversations that we've had for last many years about gold. I've
Yes.
been tracking gold since 2008. Have been continuously recommending all our clients via platforms like yours and our own clients and clients whom I interact personally when I conduct investor awareness programs, that please put some part of your investable capital in gold. It's a asset class that will not give you return every year, but whenever it starts moving 3 year or so, it doubles. This is the methodology that gold has been following for the last couple of years. As far as alternative investment funds or debt funds are concerned, or overnight funds are concerned, look, it depends, Sakshi, upon individual, right? I mean, what kind of risk appetite and what kind of time horizon you are looking at. And what is the capability of understanding the equity markets in different asset classes. So
Yeah.
I would again, mention the same advice that I gave or comment that I made earlier, that diversification is a must. Don't put all your eggs in one basket.
And at the same time, we are looking at MCX silver at record high levels at 1 lakh, 9,500 rupees as what we can see at this point in time. And 1.1 rupees, 1.1 lakh rupees per kg is what one can actually see. Even on gold prices, we are seeing further uptick there. Let's, while the markets settle down in the pre-open trade, it's important to look at some of the stocks that are in focus. Let's start off with BSE. That's the key stock that we are looking at. Last evening, right when the markets were about to shut, and right after that, we got this statement from SEBI on the exchanges that they have approved NSE's weekly expiry to Tuesday, a decision that was long awaited, was anticipated. Finally, it has come through. For BSE, they have allocated Thursday. Now, so far, it used to be, Thursday for both, but now NSE will now have it on Tuesday. Let's see how this one is going to impact BSE. There is already a reaction, a negative one, 5% lower on trade on BSE stock. 25.25 is the current level. From the last couple of sessions, the stock was already under pressure. Remember, after the bonus split, it had gone upwards of even 3,000 odd levels. And from that time, there has been a decline. And this is the knee-jerk reaction that you're seeing. There are some concerns of market share loss or a volume loss to NSE that now can occur. Ms. Shah, first up, what exactly do you assess when the SEBI has come out with this decision? Tuesday expiry for NSE and Thursday expiry for the BSE. How does life change for traders at large first? And then we can come up to the how will it benefit the exchanges now?
Oh, finally, this has been put to rest. I am so glad. I hope now capital market related stocks will not do tandav they used to do, especially stocks like BSE. Of course, this is not a recommendation, Sakshi. I'm just referring to a name which is closely associated with this. So, what has changed, Sakshi? Only a day has changed. Okay. From Thursday, you moved it 2 days ahead to Tuesday for NSE, and for BSE, it is Thursday. I don't think it makes any difference, right? Yeah, I mean, you may get some opportunity, some intelligent mind or brains would want to do some kind of hedging, NSE, BSE, NH. It depends how it works out. I don't have much insight and I don't have much knowledge about FNO, to be very frankly. I am far away from the puts and the calls of the world. So let us see how it happens, but I don't think it will have any kind of serious, meaningful impact. At least that's my assumption. I hope I'm right on that.
Okay. And on BSE shares, sir, how do you see this reaction? What would you advise investors to look at when they are looking at this? Some kind of a concern on market share loss and volume loss. We are seeing so many brokerage houses also come out with their reports today. So Jeffries has a whole target with a target price of 2,900 on BSE. UBS has a buy target price of 2,633. Goldman Sachs has a neutral target 2,430 is their target price. Motilal Oswal has a neutral rating and a target price of 2,300. How would you look at BSE stocks, sir?
So I won't comment on BSE since we don't have a coverage, but we like this sector, that is capital markets, Indian stock market. We have coverage on CAMS. Our team has coverage on CAMS. But don't look at this, short term, medium term. Look, we've discussed this earlier also, if I'm not mistaken, Sakshi, that if you believe that the Indian stock markets are going to do for the next 3 years, 5 years or more, then strong fundamental companies associated with the Indian stock markets, capital markets, will also perform well. Whether it is a platform provider, whether it is a service provider, or whether it is an intermediary. Intermediate news flows, valuation wise, you may have some kind of adjustment in terms of price correction, but the long term growth story for the sector remains quite intact.
Okay, so that's as the capital market story goes at this point in time. There are several other stocks that we can definitely watch out for. The next one that I want to pick is from the metals pack. Vedanta and Hindustan Zinc is something that we want to discuss with Gaurang now, especially because, of course, what we are given to understand is that Vedanta is likely to sell a 6.6 crore shares or 1.6% equity stake of Hindustan Zinc via block deals with a floor price of 452 rupees per share. That's what we are given to understand. How do you assess Vedanta, Hindustan Zinc impact on both at this point in time? Vedanta is also interim dividend bound. They have just come out with that announcement as well for the first one for this current fiscal year. How are you assessing both these stocks, sir?
Well, so Vedanta, there has been a coverage for a pretty long time, and of course you have news flow of demerger also, which is a tailwind positive. On and off last year, you know how much dividend was paid out
Yes.
by
Yes.
the company to various stakeholders. As far as Hindustan Zinc is concerned, well, again, after a tipsy-turvy ride, and of course, the kind of dividend and the noise that was there, it's now settled down. We have our research team has a hold recommendation on Hindustan Zinc from a long-term point of view. I mean, both Vedanta as well as Hindustan Zinc. Our research team is positive.
Okay, got that. So that's the Vedanta Hindustan story as to Hindustan Zinc story that we can be looking at this point. Another story that I wanted to discuss is defense with you, sir. Of course, that's something that we have consistently talked about. The momentum continues on the positive side. Shipbuilder stocks, HAL, BAL, stunning moves continue amidst all this fresh new world order that we are seeing where heightened geopolitical tensions continue. Now, Bharat Forge has also signed an MOU, sir, with a French company, Turgis Gellard, to offer AAROK UAV in alignment with the Indian Ministry of Defense. A MAY class UAV that's a medium altitude, long endurance, designed to offer advanced technology to low acquisition deployment costs there. Things moving up on that front as well. How would you look at the defense story and Bharat Forge if you could address that?
So yes, still remain positive despite of the run-up that we've seen. There might be odd days of profit booking in terms of price correction, not ruled out. Long-term growth story for the entire defense pack remains extremely strong. Uh, I think it's a great sectorial theme to look at if one is looking at 3 year, 5 year plus kind of time horizon. For Bharat Forge, I think now the shift has happened, Sakshi,
Yeah,
from
okay.
state truck provider to America to a active defense player. And
Okay. Okay.
the company has invested also a sizable amount, and the
Mm,
results have started to show.
mm,
As far as the investment theory is concerned, well, I think if I'm not mistaken, there is a positive coverage as well on Bharat Forge from a long-term point of view. But the problem, Sakshi, is that people often look at defense sector as a sector wherein you can dabble. That's a dangerous game that people normally play. I don't think one should possibly dabble into defense sector because it's a sector that requires patience. It's a sector that requires systematic investment over a longer period of time, purely because of the kind of order book that they have and the time that they take to execute that order book.
okay, got that. So that's Bharat Forge. Let's look at the markets now. 9:15 started to tick, and let's start off with the Nifty. First, at this point in time, pre-open indicated a start below 24,800. That's what is being shown at this point in time. We are 0.2% lower, 24,792. At this point, 60 points of a cut is what we have. On the Sensex as well, if you look, the start is on the negative side, 0.2% lower. Nifty Bank at 55,602. That's also starting in the red right in the morning trading session. Now, when we look at the advances and the declines, seems it's even Stevens, 771 gains or advances to 692 declines at this point in time. All the major indices, including even the mid caps, they're starting on the back foot, 0.3% lower even for the Nifty mid cap index. Let's look at the top laggards on the Nifty then. Apart from the frontline indices, we do see stocks like Power Grid, JSW Steel, Infosys, that's starting on the back foot, about 0.6%, 0.8% of a decline. Axis Bank, Tata Consumer Products, Hindalco are the other top laggards at this point. So it's a muted to a weak start is what we can say for the markets. Hindustan Zinc, that's the first one that we'll check. 1.71% of equity has been exchanged hands, 5.7% lower for Hindustan Zinc at 457. That's something that we are looking at. Top movers on the Nifty, there are about 6-7 of them that are higher. IndusInd Bank, ONGC, BEL, we have Trent, Eternal, Wipro. Those are the stocks that are starting on the positive side. Let's also pull up BSE to see how the stock is starting. About 0.7% of a decline, 2636. So not very bad, but just a minor knee-jerk reaction is what we see on the Bombay Stock Exchange stock. But 6% decline now for Hindustan Zinc. After that, Rock Deal. Let's pull up some more stocks to see how momentum is gathering pace. Vedanta is up by 1.5%. Zydus Wellness 2.5% higher in trade. Those are some stocks that are ticking up in the morning trading session. We're also looking at ONGC, that's up. IT stocks are up. Wipro, TCS, HCL Tech, they're all up. Asian Paints is also hovering higher despite the crude oil spike. You can see a 0.3% of an uptick on that one. Pharma, some of the names like Sun Pharma, they're opening higher in trade. We're also looking at IndusInd Bank and Bandhan Bank, that's opening on the positive zone. Okay, some more details of Hindustan Zinc large trade coming in. 7.2 crore shares has exchanged hands. As far as the NSE, the Hindustan Zinc is concerned, 1.7% of an equity, 3,323 odd crore rupees have worth of shares have exchanged hands at 460.5. That's the block deal that's taken place. I hope this has given you some understanding of how the stock has reacted and on what kind of a block deal there. Let's now welcome Kiran Jani, Head of Technical Research at Janam Broking, now joining in with his opening comments on the market opening today. Good morning to you, Kiran. How are you looking at the market opening on the back foot today?
Very good morning, everyone. So, looking at the market opening, it opened with the gap down, but we can see some recovery is coming out from lower level. And as per our research team, we are looking that this weekly expiry or overall, the looking at the lower time frame chart, Nifty has created a very good support somewhere around 24,600 to 24,500. So, any dip towards that particular level, we are asking our client to go long with the viewpoint that this monthly expiry can be above 25,200 to 25,500. So we are quite bullish on Nifty, and this rally can be led by the IT, FMCG, pharma. Of course, there will be some selective stocks only can perform, but overall the chart setup is very strong. So any dips towards 24,400 to 500 to 600. It is a very good buy. Keep a stick stop loss to 24,400, and we are looking target 25,000 and then 25,200. Coming to the Bank Nifty chart pattern was very strong, but somehow since last 2 days it is underperformed to the Nifty, and as we discussed that FMCG and pharma is holding Nifty, but banking stocks are not that much holding Bank Nifty. Now somehow Bank Nifty has created very good support somewhere around 55,500 to 55,800. So that's a cluster support. If prices is not broken down below this support, then we can expect some bounce. So on Bank Nifty, we are giving conditional buy above 55,800. Once the market crosses 55,800, and then we can expect some sharp rally towards 56,200 to 56,500. So definitely on Bank Nifty, the conditional buy is above 55,800. And for this rally, we have to keep an eye on HDFC Bank or SBI. We are expecting any rally in Bank Nifty can be led by the SBI, HDFC Bank and Axis Bank.
Okay, got that. So that's the first opening comments on the markets, how you should be really looking at the setup as well as the key spaces that you should focus on. Coming back to our conversation with Gaurang, banking space is something that I wanted to start off with. One is a conversation that we can have on HDFC and ICICI. Do you continue to believe that there is more upside despite the fact that they have pulled up and supported both the Nifty Bank and the Nifty in this recovery rally so far? Is there more steam? The other one is on the names like IndusInd Bank. Now here there are some brokerage houses reports that are coming in with fresh upgrades to buy There are target price that Nomura has raised to 1,050. They believe the legacy issues seem to be addressed. ROA to improve by 1% by FY27. And there is a commitment from board to improve the governance. Ongoing search is for the new CEO, and they believe there is a clear intent to start FY26 on a clean slate now, and that's what they are expected to do. Also, RBI's recent statements acknowledging IndusInd Bank's recovery efforts have provided some regulatory comfort too. So, what should one do with IndusInd Bank? Is this a case for a fresh investment? And what does one do with the large caps like HDFC and ICICI?
So I think, look, first of all, the entire BFSI segment actually looks very exciting. We are in a very constructive downward interest rate trajectory. The pleasant surprise that was given by the RBI governor just a couple of days back. Loan book growth looks quite evident. Interest income looks coming in very strongly. Asset qualities have been improving both on the gross and the net NPA front, and by that virtue, you have provisioning coming back into the balance sheet. That means you have a stronger balance sheet. What is the outlook going forward? Well, I think if India wants to become the next trillion-dollar economy, if India wants to become the largest manufacturing hub, one of the sectors that needs to contribute towards that aspiration that India has is banking and finance. That is the BFSI segment, and that includes private sector banks, public sector banks, and strong NBFCs. Our team is positive on Axis and ICICI. As far as your question on IndusInd Bank is concerned, well, I was only a little bit disappointed, Sakshi, because it was not the IndusInd Bank management who came out and said that there was a derivative loss of 1,950 crores. Yes. It was much later. So that's where the corporate governance is something that I get extremely cautious about. But post that, I think there were 3 external audit agencies who did the forensic audit, if I'm not mistaken. Even RBI did what it had to do, and then they've given a clean chit. I only hope and pray that there is no ugly picture or situation like this, because IndusInd Bank earlier also, Sakshi, was in the news for all the wrong reasons.
Yes.
And when a bank comes into, and especially a bank which is associated with a renowned name, or the promoters are very well known, such misgovernance is something that is very, very serious. Having said that, our team is maintaining a hold on IndusInd Bank, and I hope that the recovery is strong enough to take it to its lost glory levels.
Okay, so that's the banking outlook as well as IndusInd Bank as to how Mr. Gaurav Shah is viewing this. Smart recovery from the lows as far as the index is concerned, Kiran, like you were expecting. We are seeing some green across the board. Nifty is now 0.1% higher in trade. Stocks like BSE also have recovered from the initial lows that we are seeing. How are you looking at the market setup right now? Do you think we'll digest all sorts of negatives and probably look up again? Is 25,000 in sight at all, or is it still a far-fetched one?
See, honestly speaking, as we discussed in morning also, we are expecting market to glorify only, and this dip need to be buy. Of course, stock specific or sector specific, the bullishness we are expecting, we already discussed about the banking stocks. I would now like to highlight few of the IT stocks and auto stocks. Auto I forget to mention. So in IT stocks, we already mentioned that this current rally or in upcoming rally should be led by the IT stocks. And in IT stocks, Infosys, Wipro, Tech Mahindra, this kind of a large cap stock which we are liking. And you can also see on a mid cap front like in Persistent or maybe Emphasis or Coforge, which can lead this rally. So Infosys is our preferred pick. We are continuously recommending Infosys. Even on our TV channel, we recommended somewhere around 1480. Now it is trading at 1640. We are still ask our client to go long. So even today we can see that Infosys trying to sustain above its 100 days moving average, and definitely if price is sustained above 1640, then we can expect 1700 kind of level in upcoming time. So Infosys looks very much promising. Now coming to the auto sector. Auto sector is also has created a very beautiful pattern and on that daily price chart, and we are expecting in auto, Tata Motor has been failed its earlier pattern, but today it's showing some recovery sign, and 680, 670 is the stop loss level only. And at now that particular price, it is showing some kind of a positive. So if Tata Motor is keep holding 670 level, then we can expect some smart recovery on Tata Motor, but it's a little bit risky call. So keep a strict stop loss of 670. Hero Motor Corp looks very much promising at current market price. Multiple inverted head and shoulder pattern we can see on Hero Motor Corp. If it is keep sustaining 4300 level, then we can expect 5000 plus kind of a level in upcoming time. So Hero Motor looks very much promising. One can go long on Hero Motor Corp and Tata Motor for sure.
Okay, got that. Gaurang, coming to you. And I just wanted to also bring up a few other spaces for you. IT stocks, what's your fresh take? Do you think the deep pessimism is being bought into? It's going to be taking a leadership role. The index has been showing us some promise, 0.4% higher. Both large and mid caps are also coming back and in focus again. We have discussed this in the recent past as well. What's your fresh take?
So the recent past, if I'm not mistaken, Sakshi, was in the month of April when the intelligent president announced tariffs across the world. And that's when the whole world had written an obituary on IT industry, especially in India, right? And nothing has changed, honestly speaking. I mean, has US gone into recession? Not up till now, and hope not. Has US gone into a slowdown? Not until now, and hope not. From post 2nd April, when that obituary was written on Indian IT companies, there is a smart pullback, Sakshi. And we always believed in the Indian IT sector as an investment growth story. We also believe that there are difficult times for any sector. Why not only IT? Why flag out only IT? Any sector can go through some difficult times depending upon the international situation, news flows, local and global development of policies, change in policies. But the long-term growth is positive. So we are positive on large cap, mid cap, small cap IT companies. And my sense is that, the large part of contribution does come in from US for some IT companies as far as top line and bottom line is concerned. But there are growth opportunities within India and other geographies minus US. So we remain positive on the Indian IT sector.
What about the pharma sector? Yesterday there was a bit of decline, and again statements coming in from the US on tariffs again have been being seen as negative. Indian pharma stocks, many of them fell up to 4% as well. Reportedly, US President Donald Trump has told reporters on board Air Force One that tariffs on pharma sector are coming soon. Now, what does that mean? How much of tariffs will be coming in? Will any tariff, because right now they are at zero, be a negative for the sector? How would you really look at it, sir?
So at 35,000 feet, you often become light on your head, It gives you high vertigo, right? But I mean, I hope and I pray to Lord Almighty that how I wish and all of us wish that we could fast forward to 9th of July, which is the last day, if I'm not mistaken. Sakshi, correct me if I'm wrong, for that 90-day window, so-called, courtesy that President Trump had shown to the rest of the world. So we'll have to live with this for next couple of weeks. And I hope that does not get extended because, Mr. Trump is behaving like Indian courts, Tariq pe Tariq, Tariq pe Tariq. So it's very difficult to take a call. But yeah, I mean, pharma sector looks attractive. India is, and India will always remain a pharmaceutical to the world. And along with pharma, I think we should also look at healthcare, that is hospitals and diagnostic companies which are strong and fundamentally strong. Some red flags from US FDA Form 483 establishment inspection report, shortfalls in manufacturing good practices or product recall could be an overhang. It was in the past, it will remain in the future also. But yeah, the sector looks interesting.
The sector looks interesting. Well, thank you so much, Mr. Shah, for being with us on the program and helping us with all your views on the markets. Always appreciate your time.
Thank you, Sakshi. All the best. Bye-bye.
Thank you. 24,900 is with us, viewers, on the Nifty, 0.18% of an uptick. So let's hope that this continues for the better and goes on to show us some more promise. Let's read up the markets and we'll continue our conversation with Kiran on spotting the stock ideas for you. And of course, looking at the key sectors where all the action is in the markets today. Let's start off by talking about the index first. Nifty is up 1/10% higher, almost 2/10% up. Nifty Bank is almost 2/10% higher in trade, so that's come back. Financial services are up. You have the mid caps, although flat with the negative bias. Small caps, there is some inching on the higher side. India Wix mildly lower at 14.3 odd levels, so comfortable there. Let's look at the key sectors. Autos are up 1% higher, nearly almost 0.9% up. You can see FMCG mild, just green ticks there. IT mild with green ticks there. Pharma 2/10% higher. PSU banks flat with the positive bias. Real estate 0.9% higher. You have consumer durables, oil and gas 0.3% up in trade. Those are the key stock sectors that are in focus right now. Autos driving the show. How would you look at it, Kiran, today?
Liking auto as a preferred sector for us. And we mentioned about Tata Motor and Hero MotoCorp. Hero MotoCorp is started performing well. So we are expecting some more fireworks should come on auto sector. The prima facie, there are two things. One is, of course, technically sound very much positive. After the RBI cut and now the festival season is all coming. So definitely one should look for the two-wheeler space. Secondly, the taxation rate is also being moved from this year. Everyone has a tax-free limit to 12 lakhs, so that consumer spending will increase for sure. So these 2-3 fundamental as well technically looks very much promising, and we already had a very bad time for the Tata Motor, very bad time for the auto. So in two-wheeler space, Bajaj Auto, Hero MotoCorp is our preferred pick. Even TVS and Eicher Motor performed very well, but as of now, we look that there will be some time corrections over there. But Bajaj Auto and Hero MotoCorp can perform. In four-wheeler space, we like M&M and Tata Motor. So both are looks very much promising at current market price. Tata Motor somehow looks a little bit risky at current market price, but if market holds the current level, then definitely some fireworks should happen. So yes, these four stocks can investor make their portfolio and keep their these stocks in their portfolio for sure.
Okay, got that. Let's look at some of the other pockets then. Let's look at the index contributors. That one will be a good one to look at this point in time. Index contributors on both the negative as well as the positive side. On the negative side, you have Kotak Mahindra Bank, HDFC Bank, Infosys, NTPC, Power Grid, and JSW Steel. On the positive side, you have ICICI Bank, you have Reliance Industries, M&M, Maruti, and IndusInd Bank also contributing on the positive side along with Bharti Airtel. Reliance Industries, what's the call there, Kiran? Finally the stock is again moving up. Is there going to be further built on strength?
Yes, so if you look at the Reliance, it's been in a very tight range. If you look at, there is a big support at 1400 level, 1420. So any dips over that particular level can go long. Keep a very strict stop loss to 1400. If 1400 is broken down, then we can expect further correction. Otherwise, there are very good chances we can see 1470, 1480 kind of level in upcoming time. So one can go long on Reliance at current market price for sure.
What about IndusInd Bank? I have to ask you as well. We were discussing with Gaurang as to how the bank is poised because brokerage houses are now finally turning more positive. They believe the governance issues are being addressed. The company is getting on track, wants to start off with a clean slate there. RBI has also come out with recent statements saying that they are looking at the recovery efforts that the company has been doing. 4% higher IndusInd Bank at 841. Is the worst behind? Should one participate in this momentum?
So now everyone is behind IndusInd Bank. Reason being, we had seen that there is some corporate action, but somehow technical price pattern has hold the very good support of 750. I clearly remember the day when there was some top 5 officers from the IndusInd Bank guilty or victim in insider trading. That particular day also we discussed this particular stock and we highlighted that if is not broken down, we can definitely expect some sharp recovery. And this is something is happening So we should believe on the price chart, of course. Now at current market price, stock price is approaching to its 100 days moving average, and once the prices crosses its 100 days moving average, definitely some short covering and some sharp rally should happen. So now there will be a FOMO also, because stock price has retested 650, 600 kind of a level, and from that now it is 480 also. So people probably can chase this particular stock, but traders should be smart over here. Keep a very strict stop loss of 800, and you can go long. If 800 is broken down, we can expect further price correction. Otherwise, if 800 is not broken down, we can expect price recovery till 1000.
Okay, fair point. I hope this has also helped you out in understanding a key strategy there. Let's look at some of the other pockets. Let's look at the Nifty 500 basket. We haven't talked about the broadest index today and seen where the momentum is getting generated. 0.16% higher for the index as a whole on the Nifty 500. The names that are rallying, of course, are LG Equipments. First Cry is up by 3.5%. You have Vishal Mega Mart that's up. You have Shipping Corporation of India, Reddington, Uno Minda, JSW Infra, JM Financial, T Mart, Keynes Tech, varied stocks that are actually higher in trade, from various sectors. Let's also pull up the stocks within the small caps basket to see if there is a trend that we can catch here, or is it going to be just very select stocks from across the board and across various sectors there as well? That's something that we will be looking at. Meanwhile, if you could also, Kiran, look at these mid and small caps, broadest index, Nifty 500, and tell us any names that you particularly like where the momentum can be carried on.
So on large cap front, Reliance we discussed, Aeroportal we discussed, Infosys we had discussed. Now again, I want to reiterate the banking. In banking, large cap front, you can go long on SBI at current market price without any second thought. There is a multiple inverted head and shoulder pattern, 200 days moving average, multiple positive divergence is also already there. So SBI Bank looks very much promising at current market price. Risk reward ratio is fabulously available at current market price. So with the keep a strict stop loss of 770, you go long on SBI Bank. Sorry, again. Above we can expect 840, 830 kind of a target in short time. So SBI looks very much promising. One more stock which we are liking, that is Axis Bank. If you look at the Axis Bank, again, it's very good support, available at very good support. You can see double bottom pattern breakout on Axis Bank. You can go long at current market price, keep a strict stop loss below 1180, 1170, and prices is keep holding 1200 level. Then you can expect price target of 1283 or 1300 in short time. So SBI and Axis Bank definitely can go long at current market price.
Okay, got that. I hope this has also answered your question well, as far as the viewers are concerned on the mid and small caps, where they always seek to find some interesting stock ideas. Let's look at some of the other pockets that we can tap for all our viewers there. F&O space, Kiran, what looks good?
On F&O space, there are large cap stock again I wanted to highlight, but this time you can look forward some metals stocks also. So in metal stocks, you can check Vedanta. After a beautiful rally, we can see some Vedanta is in sideways trend. So at current market price, it is available at very good risk reward ratio. You can go long on Vedanta, keep a strict stop loss of 450, and you can expect some price rise somewhere around 480, 490 in short time. There is one more sector which can be play as a defensive, that is a FMCG. In FMCG, ITC look very much promising. We prefer it is a very safe bet at current market price. Go long at current market price, keep a strict stop loss of 412, 410, and if price keep holding current market price, then you can expect price target of 430, 440 in upcoming time. So yes, Vedanta and ITC, you can go long at current market price.
Okay, got that. Well, very smart recovery in the markets that we're seeing from the low point of the day. And we are also approaching the first half an hour candle as well, 0.3% higher for the Nifty. We are at 24,934. We will take a comment on the markets and the frontline indices as far as, Kiran's view is concerned. But let's look at some of the other stocks too, where we can focus on some of the stocks that have been in news. That's something that we can look at. Let's talk about the new age ones with you, Kiran. Let's talk about three stocks. Okay, one is Ola Electric. I know you've talked about the auto space. there is news information that ride-hailing platform has announced a nationwide rollout of 0% commission model, enabling drivers to retain 100% of whatever fares they earn. And this will be applied to autos, bikes, cabs all across, and with no ride or income limits that the company is announcing. This is probably going to really aid all the drivers to shift focus on Ola Electric, since they will be able to retain the entire part of the earnings. So they say that drivers will have the option to choose their own plans, keep the full fare of amount. And this has happened, I think, because there are several disruptions that were happening in the same space with negotiations, apps also allowing you to decide your own fare and negotiate that with the drivers. And that's something that has led Ola Electric to take that decision. One is Ola. Stock price has been absolute, disappointment. 46 odd levels from the all-time high levels of upwards of 100 odd levels. We've been seeing how the stock price slid, and there is no respite for all those who got the IPO allotment at around 76 odd levels. They are completely seeing a disappointment on this one. The second stock that I want to focus on is delivery as well. That's another one that I want to discuss with you. There has been gradual improvement in the stock price on this one, and news flows are also turning positive for this one as well. That's something that I wanted to discuss. And the third one is Nykaa, that's coming on the radar of brokerage houses as well, fresh. These three stocks is something that I want you to pull out the charts of. Limited data for you for all three, but if you could help us understand on the charts right now, what looks good. For delivery, the CCI, Competition Commission of India, has approved a proposed acquisition of 99.4% stake in Ecom Express by Delivery for 1,407 crores. So that's also in focus, and Nykaa is coming back on brokerage houses radar. To you, Kiran.
Yeah, so I appreciate your efforts that you have identified the stocks with very much in-depth research. So appreciable this thing. Now coming back to the queries you have raised, or the answer the question you have raised. First of all, coming to the Ola, definitely they are coming with some good news for the dealers and everyone, but the price is not reflecting the same. The prices keep trading into the falling channel only, and it has broken down its all important moving averages. Previously, stock price had a very good support of 80 rupees, and it has broken down is 80 rupees. Now, the previously stock price has a 45, 40 rupees kind of a level. Stock is approaching those level also. So current market price, new buying is definitely not recommended. Anyone is holding, keep holding with a strict stop loss 44 or maybe 45. So sorry to say, but no recovery we are seeing on current market price. So it is not advisable to go long for sure, even after such kind of a good news for the dealer and everyone. So let's wait for price to showcase such kind of excitement, and then only we should go long on Ola. One more stock you discuss about, that is delivery. Now you look at the delivery price pattern. It is a very good price pattern at current market price. Definitely we would like to ask our client or viewers to go long. Now you can see the stock price is trading above its all important moving average. The correction has been started from 480 level to 250 level. From now 250 to it's again 360 level. The new age stock, you can see clearly rounding bottom pattern breakout, multiple falling channel or falling trend lines are breakout. Stock is above its 200 days moving average also. So multiple bullish pattern is there. Momentum indicator is into the bullish or number of patterns. So you can definitely go on delivery long on delivery at current market price. Keep a strict stop loss below 350. You can also find 340 as a 200 days moving average. So you can keep a strict stop loss between anything 350, 340 and keep hold this particular stock. Definitely we can expect some price target of 440, 450 in upcoming time. So delivery looks very much promising. Coming to the Nykaa, at current market price, Nykaa has given a breakout from double bottom pattern somewhere around 180. After that, it has touched to the 200 level. Again, from that level, its stock price into the consolidation zone. Somehow, stock price is holding its 20, 50 days moving average. Anyone is a risk taker, they can go long, keep a strict stop loss below 118, you go long. Initially 210, 215 would be the target. Once that crossed, you can expect price target of 250 also. A little bit risky comparing to the delivery, but if anyone have a capital, they can invest in both. But if you want to give a preference, delivery will be the preference, Ola will not be the preference.
Okay, fair point. I hope this has helped all our viewers out identify the right kind of stocks in this basket. First half an hour of candle has been formed. Kiran, if you could look at the chart, tell us where are we headed at. 24,944 for the Nifty, 0.36% higher. It's been a very smart recovery. The Nifty Bank is also up into the green. Several pockets within the Nifty Bank also aiding the sentiments, and the sentiment is improving across the board now. Your sense?
So, looking at overall chart pattern, definitely the range for today is 24,000 for 900 to 25,100. 25,000 will be the equilibrium for intraday. You can see multiple call options writer has been created open interest. So there would be a small resistance. Yesterday also we can see the market open at 25,000 and then the corrections keep started for the entire day. So today also we have to keep a look at 25,000. If prices crosses 25,000, then we can expect some short covering. Chances are very less. So any dips towards 24,900 or 24,850, you go long. Keep today's low as a stop loss. Keep booking for intraday points. Intraday profit somewhere around 25,000, 25,100. But if price sustain 25,000, then we can see some smart recovery. But as of now, I think we're done for the day, and now there will be the consolidation between the 24,900 to 25,000. Either side breakdown will lead 100, again 100 to 150 points of the rally. Coming to the Bank Nifty look very much strong now. We discussed about 55,800. Stop price is holding 25,800. If still till by the time 10:30, if stop price keep holding 55,800, then definitely we can expect some short covering moves on Bank Nifty also. So Bank Nifty looks promising. You can go long at current market price, keep a strict stop loss of 55,500 and price target of 56,200.
Okay, fantastic. So that's the call on the Nifty as well as on the Nifty Bank there from Kiran at this point in time. Kiran, for the day, of course, tomorrow, for the day and for the rest of the week, what exactly would your call be in terms of stocks?
In terms of stocks, I want to hit the auto again. Hero Motor would be the pick of the week. You can go long at current market price 43.50, 4300 would be the stop loss, and target would be 47, 4800. One more stock that is SBI. Again, SBI is our preferred pick. Go long, keep a strict stop loss of 770 or 780. Expect price target of 820, 830 for this week.
Okay, got that. Kiran, we'll thank you then on that note for being with us on the program and helping us with all your wonderful insights and key stock ideas that you've shared with all our viewers. Appreciate your time with us. Thank you so much. Hope you have a fantastic day. We'll see you soon. 9:48, we'll start wrapping up the morning edition of Market Today, viewers. We have started off on a dicey note, but look at how markets have swiftly recovered in trade. 0.3% higher, 24,900 is back with us. Let's see whether this sustains on the Nifty. On the Nifty Bank also, the index is now at the day's high level. Let's look at the Nifty first, and we will now look at some of the key stocks that you should be keeping a keen eye out on. Now, on the Nifty, the top movers are IndusInd Bank, now over 5% high in trade. We've taken both fundamental and technical views on IndusInd Bank for you. Auto space, as Kiran has been reiterating, is the focus. Maruti, Eicher Motors, M&M, Bajaj Auto, 4 of the top 5 movers on the Nifty today are from the auto pack. Even Hero Motocorp, where he has also given an outlook to you. Titan, Trent, those are the other names that are higher as far as the Tata Group stocks are concerned. On the lower end, you have Kotak Mahindra Bank, Power Grid, Adani Ports, NTPC, HDFC Life, JSW Steel, and HDFC Bank that are not supporting the sentiments at this point in time. Now, when we look at the key sectors that are hovering higher, autos definitely, FMCG, IT slight gains, financial services up. You have pharma, PSU banks, private banks slight moves on the higher side, real estate and healthcare index also higher, consumer durables, oil and gas also moving up in tandem as well. What's not doing well? Metal slightly on the back foot, media stocks on the back foot. Mid and small cap healthcare stocks also on the back foot in trade today. On the Nifty, mid caps and the small caps, the index have both turned green. On the small caps, there are several stocks that are in focus right now. Keynes Tech is hovering higher. You have KFin Tech, HFCL, Naveen Fluorine is also back in focus. CESE, Angel One, brokerage related stocks are also higher, but BSE is seeing a negative reaction to the expiry session being moved to Thursday, but this is also recovered from its lowest point of the day as well. So that's something that you can definitely keep an eye out on as well. With that, viewers, we wrap up our morning edition of Market Today. Market coverage will continue throughout the course of the session on Business Today television. And in case you have doubts about the stocks in your portfolio, newer stocks that you are keeping on your watch list, ask your questions on daily calls at 12 noon. I'll be back with two market experts helping you out with the right strategy on the stocks in your portfolio and guiding you with the right set of stocks to form your portfolio too. Many thanks for watching in. Stay tuned.